Another video here updating you on the current situation of the portfolio. We're just going to go through one by one. I know it's been a while. Actually, let's see. The last video updated was 5 months ago, and at that point we were at £4,000 invested. So let's just jump into it. Today's going to be me going over every stock that I'm holding in the dividend account, but I'll go through everything. Okay, so let's just jump into it. First one here is 3M, obviously a staple dividend aristocrat. You can see here it is return positive 4.17% at the moment. The gain's been pretty good this year. And they also raised their dividend. The board of directors today declared that the dividend on the company's common stock of $1.48 per share of the first quarter of 21, which is an increase of 1% over the quarter dividend paid in 2020. So that's always good news. Their dividend yield at the moment is sitting at 3.35%, which is really good. If you find anything between 4 or 5, that's where I like to invest. I'm not sure if you're new to trading 212, which it shows you my investments here. It shows which I've bought manually, which I've actually clicked through and bought myself, or which I've bought through my pies. Go over pies at the end of the video. First, I've got 3.9 bought manually and 2.38 in the pies, but we'll go over all the pies at the end of the video. Next, we have AMD. This isn't a dividend payer, but I'll go over in the end in the pies. I've got two sections. I've got two pies, and the idea behind it is I've got one, my main goal is a dividend income, so I can have cash flowing assets, and the other side is I have future stocks. I wouldn't just invest, and hopefully in the future they do decide to pay a dividend, but I wouldn't just invest in speculative stocks that are just, I'll go through these kind of stocks. I've got a couple of them, but I think everybody can agree AMD is pretty much here to stay. I know they're not paying a dividend, but and at the moment I've got 2 shares, average price $70, £54, and I'm up 21%, so £23. I know this company gets a lot of hate. It's a real estate investment trust, and the dividend yield is sitting at 9.23%, and this is way too high in my opinion. It's not safe. It's due to get cut at some point. It's due to go down, so don't think, oh okay, look at the dividend yield and then dump thousands of pounds in it. I can take the risk because it's in my portfolio, but it's in a pie, so I'm willing to take the risk on this. I've got 3 shares, so not too much risk. I've got return of 9.42%, but we'll go over my dividends at the end of the video and you'll see how much they're paying. Apple, not a dividend payer, but again in that future stocks that I was talking about. Altria, I know this is a sin stock. Some people like to invest in it, some people don't, as it is a tobacco company. I've got 10 shares, 3.11 bought manually, 7 bought in the pies, return of 94 pence at the moment. But the thing with this company is it's one of those dividend companies, if you talk to any dividend investor, they'll own it basically. It has a dividend yield of 8.37%, so I'll show you how much they've been paying me over the past year. Amazon, again, growth company, no dividend. NYL, annual capital management, this is another one of those. It's not recovered really since the pandemic. We're at $8 a share now. Previously it was sitting at $10. 4 shares in them, £27, $2.48 return, and their dividend yield is 10.84%. Again, one of these extremely risky plays. I'm relatively new. I just started at the start of the pandemic and the crash. That's when I got into investing, but the problem that I'm seeing these days is people that are trying to get into dividend investing take thousands of pounds, dump them into high dividend yields, but don't look at any other metrics. Don't look at the revenues and net incomes, the profit margins, anything like that. But if you are going to invest in a company, do look at all these things to make sure that the company that you're investing in, you are going to get your return. Next company doesn't need any introduction. It is Apple. Apple, currently I have 5 shares. I would like to have more. This is one of those stocks, if I could just buy, go to a deserted island, if I had to stay there for years and years, come back and hold one stock, this would be the one. It's currently sitting at 136. In my opinion, it's a bit expensive, but I've been saying that all the way since like $100, and it's just keep going up, up, up. I am sitting at a crazy return at the moment of 40%, which is £163. This is one of those buy and hold. If you buy this company, just hold it, hold it, hold it. Don't sell. Just try and get more when you can in the dips. It's got a dividend yield of 0.64%. which is really nothing. You're not coming into this company for the dividends, you're just coming into for the actual company itself, and it will keep growing and growing. And I got into this company at $90, so way back at this point in June. So Imagine I had more cash at the point, I would have bought a lot more and I would have seen this crazy rise. But yeah, any of these dips, just try and buy more if you can. Okay, next company, AT&T, and yeah, this is one I've been going hard on just because it has a high dividend yield and I think this company is going to last. I know all the problems with the debt and stuff, there is a lot of issues there, but if you look at pre-pandemic levels, it was sitting way up at 38, and if you're looking over time, it's always sitting above 30. So that was my thinking behind it. It's $28 just now. I always try and get it at $28, $27. Average price just now is $29. AT&T has a really good dividend of 7.27%, which is crazy, and I will show you at the end of the video how much they're paying me every quarter. It is quarterly they're paying, not annually or monthly. So yeah, I've also got them in my pie. So you see here 14 shares bought manually, 36 bought into pies. So every time that I invest in that dividend pie, you'll see which percentage of this goes to AT&T. So that's why 36 shares have been bought in the pies in full. They also just released an ad with LeBron James, which I thought was pretty interesting. So they are still trying to market and stuff like that. They are still pushing. So I am going to buy more of this company, especially if it drops under $28. I'll be straight in. Okay, next company. I was thinking I only have like 0.6 shares, so there's not much in it, but I do want to go into this company a lot more. They are one of the safest dividend payers. They've been paying dividends for, yeah, as you can see here, the Bank of Montreal is the Canada's oldest dividend payer, and it's been paying dividends since 1829, longer than any other Canadian firm. It's currently trading at a 10% discount. So yeah, that's why I kind of bought in that small amount. It's just to keep it in mind and keep it on record. Startup Developments, this is a housing company here in the UK. I have got 4 shares, 7.7% return. Okay, this is GOEV. This is one of those more speculative stocks. This is kind of one of those that you don't know what's going to happen. It's not up, it's everybody's to their own thing, but for me, I'm just not really into it. It's one of those EV stocks that either could just disappear or go to the moon, but I've not got much invested in it, so we'll carry on. This is one I'll show you in my pie. I've got like an ARC pie that is all these up and coming stocks that might go. This one is up 15% at the moment. This isn't a dividend payer. It's an e-commerce based platform for selling used cars. Let's jump into the next one, and it is Chevron. I know a lot of people are not on these oil stocks, but I don't think oil's going anywhere anytime soon. I do think in the long term, yes, it is going away, but in the meantime, it's my plan is just to continue to buy, collect dividends until we do get to the point, because most of these oil companies are starting to change their view and get into electricity. So as you see later on with Shell and stuff, they've got more of their petrol stations turning into charge ports, so we'll see what happens there. I have got 3 shares of Chevron at the moment, losing a £6 return. Their dividend yield is 6.6%, so I'll jump into dividends and show you how much I'm making off of them. And the next one is Cineworld. When cinemas come back, which I hope, we have 163 shares, so £120. Pre-pandemic levels was sitting about 680. At the moment it is 73 pence, which is mad. If you see it, it was building over time, as you can see, and then chopped right off. So we're going to see with all these streaming sites like Disney and stuff, what's the next play. If I know the cinemas and all these companies are having a bit of an issue at the moment with they are releasing their movies straight to streaming instead of the cinemas, but we'll see what happens there. I do think once this is all over that people will want to get back to the cinema. These stocks will rise again. It's already picked up for me since I started buying. It's up £7, which is crazy because this has sat in the red for so long. They are a dividend payer. They have cut their dividend, obviously, but it was sitting at 11.44%. But this will obviously stabilize. All these things will stabilize once the cinemas do reopen again. Clown Fair, another one of these companies I've got in my art pie. Okay, next one, Coca Cola, standard. $49 at the moment. I would like to pick up more if it does go to the $45 mark. I've got 10 shares minus £5. Dividend yield of comfortably sitting at 3.41%. CrowdStrike, another one of these companies I've got in the ARC pie, which I'll show you. Diageo alcohol company, it's currently sitting at $30-ish a share. Good dividend payer, solid stock. I think it will come back after the pandemic and raise up with obviously all the bars and stuff opening. dividend yield of 2.39%. Enbridge, ExxonMobil, this is another one that I think will come up, even if it comes up to pre-pandemic levels of, let's say, 68, it's currently at 50. So, and the dividend is mad. They paid their dividend all the way through this pandemic, so it's definitely one of those companies to hold. If you do have, just hold it through. It's got a 7.76% dividend yield, so yeah, I want to buy more of them. Fastly, another one in ARK Invest, which will go through. 5.9, Fiverr, which is I don't have much of. It's been mental. Look at this, is crazy to be honest. If you had it $23 a share, or even in January $26 a share, now it's up 1,054%, which is mad. So congratulations you guys on Fiverr. General Electric was one of the shares I got for free for using the code, so thank you guys for that. Gilead Sciences, Gladstone Investments, GlaxoSmithKline, which is one of those stocks up and down, but the dividend is pretty stable, solid. Greencoat Wind UK, this is another one of these plays. It's been stable for like the past 5 years in a long. Dividend yield of 5.19, so another good dividend. Greggs is like a pastry sandwich company here in the UK, been up and down. We have Halliburton, IBM, and this is the only weed stock that I own. So this is IIPR, and it is basically a weed dividend REIT. So what they do is the places that they do grow weed and stuff, or they rent out the properties to grow on, basically, and they pay a nice dividend of 2.62%. So you're getting kind of both worlds. You're getting into the cannabis side and you're getting into the REIT side. So kind of covering both angles there. Iron Mountain, dividend yield 8.76. It's been paying well. Okay, so from here out, I'm just going to run through the names and get through this, so I don't want you to bore you with tears. So we've got Johnson & Johnson, JP Morgan Chase, Kellogg, Kraft Heinz, Legal & General, Lloyds Banking Group, Main Street Capital, McDonald's, Libra, Microsoft, Moderna, Mondelez, National Grid, Netflix, Real Investment Trust, Nikola Corp, ignore that one, Nvidia, Pepsi, Pfizer, Philip Morris, Prospect Capital, Realty Income, Restaurant Brands, and Restaurant Brands own such companies as Burger King, Tim Hortons, and Popeyes. Rio Tinto, Roku, Royal Caribbean, which is up 57%, Royal Dutch Shell, I want to buy more if it does come out with some good news in the future, Royal Mail, Square, SSE, Stag, Starbucks, Store Capital, Sunrun, Take-Two, Tesla, Under Armour, Unilever, United Parcel Service, VF, which is all your designer brands basically in sportswear, luxury wear, footwear. It's like North Face, your Vans, Timberlands, all that kind of thing. And I do have one ETF, which is all world high dividend paying stocks into one basket. I've got 6 shares of that. Walgreens, Boots, Disney, Wells Fargo, Zillow, and Zoom. Okay, if you made it this far, you deserve an award. That was a lot to go through, but we'll go into the pies. This is what I was talking about. So all those companies that you see that aren't dividend payers that I told you are kind of speculative would be in the ARK portfolio. So this is what I was showing you earlier on. So these are all based in one pie, and the whole pie is up 16%, so which is really good since the start. But these are, some of them are more speculative than others, and some of them are solid companies. As you can see, my dividend portfolio here is £2,797, and this is really when I chuck money into here, then it is split up in these different ways, and that's why I've got so much AT&T, because it's 20% of the actual portfolio here of the pie. And we have the future stocks, which I was talking about. This is more growth stocks: Disney, Microsoft, Amazon, Apple, Tesla, AMD, Nvidia, and Google. So yeah. Okay, so you might be wondering, okay, since I started, as you can see on the YouTube channel, the first video was a way back in June, July. So you might be wondering how much dividends I've managed to receive since starting. So total dividends here is £123, which have all been automatically reinvested. But doing the maths, that isn't even a year, but if you divide that over a year, that's already, what, about £10-ish? So that's enough to cover Netflix or Disney Plus or any other £10 subscription fee you have. So that would be me set for life. If I just leave this money here, it would be growing. I would take the £10 out, pay the subscription, and if that was your goal, that would be your goal. But I've been reinvesting it to try and get that dividend amount up. So as you can see, AT&T has paid me £13.98 yesterday, JP Morgan £2.23, and so on and so forth. So yeah guys, I hope this is motivating you to see what is possible with the dividends that are coming in. And that's just a small example of covering one bill. So you go from paying your subscription to paying your phone to paying your gas to paying your rent. Hopefully that's a big goal. But yeah guys, if you have stuck with this channel since the start, I really appreciate it. You have no idea. I know I've been slacking with the videos, and if you've watched this full video, give yourself a clap in the back. I know it was a bit boring, but yeah, a couple of you people on Instagram wanted an update on the portfolio, so I just thought I would run through all the stocks and get them all out of the way. And the portfolio, yeah, sitting at £12,498. I've invested £11,454 of my own money, and the gain is £1,021 on top of that. So yeah, it's crazy. Since the last video on the channel was 4,812, and now it is sitting at 12,487, which is crazy. And all that YouTube stuff, if you could drop a like, subscribe, if you want to keep up to date with my investment journey, if you appreciate these kind of videos. Yeah, but until the next time, peace.